Hello everyone, today is Friday, October 2nd, 2020. My name is Evan. Welcome back to our weekly stock market analysis video. If you're joining us for the first time, brand new to these videos, welcome. We break our analysis up into two parts. In our first part, we're going to look at everything that went on this week in markets. We're going to look at performance and sectors and market internals, volatility, and really sort of pick apart everything that stands out and looks interesting. And then in part two, we're going to jump into the charts. We're going to put everything from part one into context, look at some longer term trends, and try and position ourselves to take advantage of the market with the weeks ahead. So hopefully that sounds good to you. Let's jump into this week's data. The couple of takeaways from the week here is we're really seeing some ping pong activity here in lots of these market indices. We are really sort of flipping and dropping, recovering, dropping and recovering. And we saw that this week in small caps, totally recovering all of the fairly big sell-off they saw and experienced last week. They recovered all that to the upside. They were our market leaders. We did see a momentum sort of fade trade on Friday. I'm not sure if actually we just want to isolate to momentum. It's really the mega cap Nasdaq trade really got faded and fell on Friday. And the number of 52-week highs is back on the rise. All of this we're going to talk about throughout this video. So started off with some top-level performance. Right-hand column here is the one-week stats for all of the major indices. You can see green across the board, anywhere from 1 to 4.3% higher here in the Russell 2000. That was the standout to the upside. Nasdaq 100 lagging a bit, still up 1% on the week, but certainly on a relative basis, it was the underperformer. Now, if we look at market internals here, we again, getting this ping pong action, this looks a lot different than what we saw last week. Remember, we were concerned here with this first row, the number of stocks, the net number of stocks at 52-week highs was negative. So in other words, there were more 52-week lows being made last week. That did flip. We saw about over 200 net new 52-week highs this week. That is encouraging to see back on track. You can see the AD line aggregate here on the week was positive. You can see the percentage of stocks over the 20 SMA up around 60% here. So also a pretty good recovery there in terms of stocks reclaiming some of those nearby trends. Now, this is our look here at market breadth, specifically the 52-week highs minus lows. This just looks back over the past 30 days and sums up the prior day. And we were right here last week when we did our video, and we were concerned about this newly sort of developed slope here, which was to the downside. And what you'll notice is we did not get continuation. We did not see acceleration lower. In fact, we basically found the lows here on Friday when we recorded, and we proceeded to rally and add to the 52-week highs throughout this week. So to me, this is an important chart. This helps not so much with the very short term. This is more of the intermediate term barometer. That's at least how I like to interpret it. And if this is heading up and to the right, that is net on net a good sign here. So the fact that we are kind of recovering our trajectory and closing up here, that is encouraging. So I think that's a good win for this week. If we look at sector performance, again, things look a lot different this week than versus last week. We've got a lot more sectors in the green here. In fact, it was only energy that was negative this week. It was down 2.88%. Technology was the second underperformer here, still positive, but only up 0.78. Communication services 0.92. Those were your relative laggards. On the upside here, real estate, financials, and utilities. An interesting mix there to the upside, but 3 to 5% and topping on the relative strength to the upside. Now, in terms of VIX, volatility term structure here, what we saw last week was, so the blue line is this week's vol structure. The orange line is last week's vol structure. And this chart was essentially in the same formation last week. In other words, we saw basically the volatility term structure rise across the curve last week. And we saw the same thing this week. We saw vol continue to rise this week. So we're getting a market environment, a regime here where volatility is slowly sort of creeping up week after week, seemingly irrespective of what price is actually doing. So you could argue there's some, disconnect there, and lots of this goes into sort of the mechanics of the market, and it gets into, very deep, complex, and quite honestly, I'm not going to say I can fully understand all of the moving parts behind volatility and how it can potentially decouple from what price is doing. But we do have this thing called the election coming up, and perhaps this is going to be the new normal here as we get closer to that time period. We might still just continue to see this grind higher in VIX and volatility as protection comes in, as uncertainty looms, and as these debates sort of rage on. So vol structure here rising across the board, despite stocks rising right across the board as well. Interest rates and credit here, we saw yields rising this week, so bond prices falling, interest rates rising, and we saw in terms of our credit proxies here, or bonds that we're looking at, LQD and JNK, they were also up on the week as well. That is, net on net a good thing. The fact that liquidity and a bid premium here is continuing in these bond products alongside of equities. If we look at commodities and the US dollar fell this week, measured at least by the UUP ETF. It was down 0.7%. That generally here is going to give a little bit of a pop or pressure tailwind to commodities. So you can see gold, silver, and ag ETF were up this week about 2 to 3%. Crude oil, though, and natural gas not getting the hint here. The energy plays were down sharply, and this is a pretty interesting development here for crude oil, which had been very stable for some time and was working on its recovery, has quickly over the past few weeks now started to really kind of tumble back to the downside. So the crude oil and natural gas also selling off there is something that is unique or new, different, and sort of accelerating. So if we look at our report card here, we take a look at everything that's going on. It was a constructive week. It was an A- grade for this week. And, one thing you can say to yourself here is I think last week we had an F. It was a D or an F for last week's performance. I think the week before that was good. And what you're basically seeing here is just this flip-flop of price data, price action, but then also market internals and this vol structure and everything else that we're looking at here under the hood continues to really just ping pong here on a week-to-week basis. And that's why part 2 of this is so important, is to put it in trends and put it in the longer term context, because there is a lot of turbulence here in the short term, and it is important to always keep track of, because eventually when we start to get continuation and a breakout either to the upside or the downside, this data is going to start to compound on itself and it starts to build into a trend of its own. But right now we're not seeing that. We're seeing strong surge to the upside, strong surge to the downside, and we're back and forth. So we're going to talk more about the longer term trends and where that puts us in positioning in just a moment. Last but not least, our positioning here with our Merlin investment strategy. We hit a lot of profit targets this week. We took some exposure down. Lots of the stocks and holdings we had did work pretty well this week. I think biotech and healthcare, we hit a number of those targets, so we reduced a little bit of our exposure into those sectors. We're still very much leaned into this market and long, so not a whole lot of change there, but a little bit less on the healthcare biotech side than we have been in recent weeks. So that's it. That's the positioning, and that's all I got for part 1. So we'll be back in just a second here with some charts. All right, we're back here. We've got TC 2000 open. We're looking at our equity market grid. Let's explain this grid for anybody new. I know all you that tune in each and every week probably get tired of me, talking about the same intro here. But for all the newcomers here, we have price is the white dashed lines on all of these charts. Our indicators, green, yellow, and red here, that is a single indicator called our Smart Trend Filter. It measures price and volume, and it measures trend and trend strength. And we are looking at a weekly time frame across the board. So if we look at this weekly time frame, we see virtually no changes week on week. So S&P 500 had a notable call out last week because it was the first time in about 4 months, that we went neutral here on our weekly Smart Trend Filter, and that persisted this week. So we've got our second week in a row of neutral readings here for the S&P. Same thing for the Russell 2000. Bottom left here, you can see went neutral last week, stayed neutral this week. So that's the same. Nasdaq still bullish, ACWX still bullish on this longer term time frame. And the way we like to interpret these colored dots here is that when things go neutral, it tells us to pay attention and potentially drill down on our time frame, but we also sort of defer to the prior trend that was in control there to still give that the benefit of the doubt. So the buyers still have the benefit of the doubt here in my eyes, at least the way I interpret this indicator in the S&P 500 and the Russell 2000, but there is clearly some of that short-term turbulence. Now, speaking of that short-term turbulence, if we go down to a daily chart, on all of these indicators, you can see just why you're seeing that weakness start to creep in there on the weekly chart is because on the daily chart, we've been in a sell or down signal here in the S&P 500 for the entire month of September, basically. And so the S&P 500 is currently neutral, but our same analogy applies here is that on this time frame, we give the benefit of the doubt to the prior trend, which is bearish. So again, the sellers still have the benefit of the doubt here in the S&P 500. We are neutral. We are trying to reverse that, but it hasn't happened yet. And so I think that is, just an important takeaway there. If we look at the Nasdaq 100, we actually saw some interesting development this week because on Wednesday of this week, this actually transitioned bullish for the first time since August, or I guess September 2nd. So for the first time, we did try and resume this trend back to the upside. You can see we're back in yellow here on Friday. So again, it speaks to this volatility and chop right now. But we give the benefit of the doubt to this prior reading here, which is bullish. So the buyers really need to step up in early next week to prevent us from sort of falling back into a sell signal here on the daily chart. So that's interesting. We're going to talk a little bit more about that price action in just a moment. Russell 2000, you can see here, neutral as well, trying to make its move back up. ACWX neutral here as well, trying to make a move back to the upside. So that is the broader sort of outlook, our trend outlook here for these markets. If we go to the specific price action and we get a little bit tighter here on our analysis, this is the roadmap we've been looking at, and you can see we've got some key levels here drawn in right over 3,400. That's been stiff resistance now for the past 4 or 5 weeks. 33.33, that was the approximate lows here in September, and it plays a role back in prior history. And what I want to point out is a couple of things. First is Monday of this week started the gap up, or we kicked off the week with this gap higher right here. So that was encouraging, the fact that we had sort of a gap and go session. Remember last Friday we had that strong move to the upside. We got follow through on Monday with this gap and go. We gave some back Tuesday, we rallied Wednesday, rallied more Thursday, and then we saw this gap down and a little bit of an intraday save. So really, the week didn't see a whole lot of movement on a day-to-day basis. There were a bunch of gaps in here, but one of the short-term wins I want to point out is Friday's sort of price save on this gap down. The fact that we were opening the session down, 1.5% thereabouts, to start the day on Friday would have been an easy sort of probe and kind of fill the gap down here and kind of roll back over. But that actually didn't happen. We saw a little bit of kind of a hold here by the bulls right at this 33.30 area. I think that's important. That's a good short-term context piece for this market. Again, if we're thinking very short-term, I think it's a nice little win there. The fact that this gap is still arguably open here, that is a win that we were able to spend 5 days digesting this gap up and not giving it back. So once again, heading into next week, I think the way and the mood on how we open next week is going to be important, because if we can push to the upside here while this gap remains open and start to make another attack at 3,400, that opens up the chances of that breakout really starting to work this time around and starting to move to the upside. Again, not saying it has to happen, it's just a scenario to pay attention to. If on the flip side we gap down to start the week, or even if we just open flat and then we proceed to sort of roll over and lose this 33.30 area, that to me would again kind of say that we're back to more convincing sort of downtrend action, and we'd have to look towards lower prices down here to potentially act as support. So I think we're at a critical spot here in the short term. Lots of indecision this week, 5 days basically going nowhere. So heading into next week, I think we got some interesting spots. 3,400 on the upside, 33.30, right, basically where we closed, or the lows of session, and then you look down into the 3,200s if we start rolling over. So that's how I'm looking at the S&P 500 right now. If I look at the Russell 2000, the Russell 2000 also, again, an impressive engulfing session that got put in here on Friday. We started the session with this big gap down. We proceeded to hold exactly where we opened and rally throughout the day. We took out yesterday's highs and then actually, added to some gains. So this is encouraging here. The Russell 2000 is trying to get back and attack this 153 area. This is, again, if we look at this prior level in here, this was the bottom end of our August range. We broke down below it. We tried to get above it. We broke down again. And then here we are kind of trying to get back over there again. So for the Russell 2000, getting back over 153, or really, 154 and change, if we can start getting back over this level, back into this old range here, then that suddenly starts to look a lot better. The longer we, kind of stay underneath, let's say, the September highs here or the August lows here, the less interested this market still is. So to me, on the long side. So good rally this week, strong rally. It was the market performers. Good to see small caps participating. See if they can continue to hold on to those gains next week. Get back over 154. I think that would bode well. Last but not least, the Nasdaq 100. Nasdaq 100 did, what was working nicely throughout this week. It again saw this nice move higher on Monday. And then even on Thursday of this week, it started to actually break some structure and start to break out to the upside. And we had, just Thursday there where we got a close over 280. And you can see the rug got pulled very sharply and aggressively on Friday here. This was the worst performing index on a relative basis. It closed near the lows. Volume was heavy, and we basically rejected this 280 area. So to me, this was a failed breakout here in the Nasdaq. This was a clear failed breakout, and it is now in the seller's court here to sort of drive us lower back into this range. So we're going to pay attention to that next week. I think you've got again, short term, you got your kind of rug pull sell setup here, where if you tried to play for the breakout, you gotta reduce risk, or know that you're wrong on a move like this. Obviously depends on what your strategy is, et cetera, but back over 280, that's sort of really that's what you're looking for. And the fact that we just broke back below it tells me that you may want to cool off here in the short term for the Qs until it can get back over 280. So that's the way I'd interpret it. Otherwise, it's still structurally one of the best looking on a longer term basis here still. But in the short term, I think you got to respect this move here, high volume at an important spot. So that's the read. That is the read on the market across the board. We know that it's basically more just choppy action. We know our daily chart trend filters here. Nothing is all that supportive. The Nasdaq, again, you can see, remember, it went green on Wednesday, green on Thursday, back to yellow Thursday, on Friday rather. It's going to depend on how this opens up on Monday. If this gets follow through to the downside, then you could probably expect this to move back into a sell signal. If we don't get any follow through and we can pop back up here, then Qs is going to hang on here and potentially still act as a leadership group. So that's the way I'm interpreting that. If we go to some of the other markets here, we go credit at the top, basically still in neutral to constructive signals. On TLT, we're still neutral. On the VIX, we are neutral right now. If we go down to a daily chart and all these instruments here, things change a little bit. The VIX has basically been in a sell signal on Tuesday, Wednesday, Thursday. It popped on Friday, so you can see we're back to neutral here, but still, not printing a green signal. So VIX, even though it's been on the rise, is not in a strong trend to the upside here. Looks like it's more just range bound between about 25 and 30. And TLT here, I think, is interesting. This started to turn up last week, if you recall, and it was hanging in there early this week. But take a look at the transition that happened here Thursday and Friday. TLT back to sell here. That's an interesting move for the long bond. A lot of volatility in there, and is still just not ready yet to stay stable. If we look at commodities here, let's go down to a daily chart on these. You can see gold getting back to its trend filter here, going back into neutral. Silver didn't quite make it back up there, still in a sell signal. But if we look at oil in the bottom left, this is where we're seeing the real sort of sell-off accelerate to the downside. Remember, this went to a bear signal here on the 4th of September. It's been in that mode since then, and we're making new lows here for USO. So looking pretty ugly there. DBC also sort of rolling over, going back into a sell signal. So if we look at sectors here, let's go to the daily chart, and I want to talk about these in just a moment. Their price, their candlestick charts. We only have 3 sectors here that are in a buy state right now. We have biotech, we have utilities, which is new, and actually I don't have semis in this mix. If I were to throw semis on here, semis are green as well. So let's talk about those sectors. Let's look at candlestick charts here. Let's go to IBB. So IBB, much like the Qs and tech, had a pretty tough Friday here because they were inching back up into this significant resistance spot. So this was the key level that we've talked about a few times. This is the, kind of breakout level to unleash momentum to the upside. And you can see we've gotten up here multiple times, many times, in fact, over the past couple of months. And we repeatedly fail around 137. And with the action here on Friday, we again have failed at this level. So in the short term, biotech back in the penalty box, right? In the short term, because we just got a single candlestick rejection here, a thrust off of resistance. We know that the longer term trend, or the daily chart trend, is still printing bullish signs here, but it's basically under siege right now, and it's going to be tested heading into early next week. So biotech putting in a higher low, not getting that selling follow through is going to be important, but you did just kind of fail here at resistance. Now if we go to semiconductors, it's pretty much the same thing. So semiconductors, we were looking at this view here. We had the highs sort of drawn out here from September the 15th or 16th, right around 175. We said that was the area we want to see SMH continue to or to get above, basically, to take out to the upside. And we did that for one session. We had this aggressive gap up on Thursday, but that was it. And then you see we got a rug pull on Friday, so we broke this immediate term momentum and we closed back below this September pivot. So SMH here also now in the penalty box. It's still, again, it's still, look at our smart trend filter. It's one of the few 3 that are green, but it's certainly being, going to be pressured here into early next week. This is why we like to look at the trends, signals, and then we like to do some candlestick analysis. The candlesticks are always going to be your earliest, if you're doing some very quick bar by bar analysis, those are always going to turn up. You're going to get your little signals to refine your timing a little bit better, and you're starting to see that now. And we'll see if this is noise or if this is the actionable, sort of early sell signal here for SMH. Last but not least, this is a new one here, is XLU. So XLU's been nowhere for the past 5 months since April. It's basically gone sideways around $55 to $60, and it still is. It still hasn't broken out in any meaningful way, but it is back to bullish trend per our daily trend filter. It went bullish here on Friday. So the fact that this is now heading back up here, got some good volume coming in on Friday, nice recovery. Let's pay attention to it, because you could start to get some rotation into XLU, which I know is not an exciting area of the market, but it's been going nowhere for 5 months, and it's been paying dividends along the way, so you always got that. But if this starts to make a move and clear over the mid 60s, could have a more meaningful trend develop there in this space. Last but not least, I want to talk about gold, GLD. So GLD here, remember, broke down last week and got as low as about 173. It did inch its way back up towards where it broke down, sort of the scene of the crime, right around upper 170s, and it's kind of testing right here. So it's going to be interesting to see the reaction. If this rolls over, then you kind of have this retest failure, and this bear trend can continue, or this downtrend can continue. But if it can pop through here and get back into this old range, then suddenly changes things. So I think GLD is at a pretty interesting spot to pay attention to right now, and we'll be paying attention to this one next week. So that's it. That is what I got for this week's activity. Lots going on, lots of interesting moves, and changing of leadership groups, and right into the bell basically on Friday. So it's a busy market right now. There's lots going on. Easy to get chopped up. So make sure you try and be as hands-off as possible, or try and hunt for that signal and not get lost in the noise. I think that's easier said than done, but ever so important in this type of market. And I'd love to know what I missed this week. So if there's anything else that you were watching this week, leave a comment below, and let me know what you think is important looking ahead, and any other markets that you're paying attention to. So that's it for me. Thanks as always for tuning in and watching. Every Friday we do these videos. You can subscribe to our YouTube channel or follow us at The Trade Risk. Have a great weekend. We'll see you back here next week.